everything that we have been seeing with the NASDAQ in early April, everything going on with biotech stocks, technology stocks, what sectors have you seen really outperforming right now? And what sectors have you seen kind of lagging behind?
Sure, energy. Money's really flowing into energy, especially the big ones, the Exxon Mobils and Chevrons, Schlumberger, Halliburton, Phillips 66, love that name. And that's typical, and historically, that's normal for a late cycle sector rotation. We've been in this bull market for 5 years. If you look back to last summer, what's the worst performing sector since last summer? Financials. That's an early cycle sector. Consumer discretionary so far year to date, worst sector in the market. Now, as you mentioned, the biotechs and things of that nature, money's now rotating out of tech. Again, these are all early cycle sectors, and we're seeing the strength out of utilities, obviously, best sector so far year to date, and now we're seeing that rotation into energy. And just think back to 2008. Remember, the market peaked at the end of '07, but energy didn't peak until May and June on a relative basis. So we could see something similar.
And we are about to get into May. Do you think this year we will see that historic saying, sell in May, go away with investors?
Yeah, I think so, and particularly in midterm years, which you and I have talked about, right? Midterm years aren't a great year. We tend to see strength towards the end of the year, particularly, which is kind of interesting, on a 6th year of a presidential term, the midterm election years at the end tend to do very, very well. So from a cyclical perspective, I could totally see a dead summer. We've been talking about it all year, Jess. Just stay away from stocks. I like commodities still specifically, so energy, that makes sense, and bonds for sure.
Now, you were talking about consumer discretionaries. What exactly is that telling us versus consumer staples right now?
Yeah, so staples are making new highs. Consumer discretionaries are the worst year to date. So when you see that rotation out of more aggressive, more offensive names like discretionaries, retailers, home builders, and the money's flowing into the safer havens, right? Staples. No matter how bad the economy is, we're still going to smoke cigarettes and drink beers and, brush our teeth and wash our dishes. That's never going to change. So when you have fund managers putting money into those staples rather than the discretionaries, that tells you what the big fund managers, what the big money is doing, and that's worrisome as well.
Now, with regards to the NASDAQ, some people were saying maybe it was a mini correction. What do you think is healthy to see right now overall in the marketplace with the Dow and the S&P and the NASDAQ?
I wish I could give you a list of healthy things. I actually have a list of very unhealthy things. We're seeing money, look at the bond market. The bond market is the smartest market. We're seeing money flowing out of high yield stuff and into treasuries. So the exact same mentality and philosophy that we're seeing into staples and out of discretionaries, we're also seeing in the bond market, into the safe haven of treasuries, out of the more aggressive, high yield junk bonds, things of that nature, and that's worrisome. So I wish I could tell you that all these good things were happening, but I'm seeing the opposite. I continue to say stay away from stocks, either have a more neutral strategy where we could be in energy and short S&Ps and take advantage of that on a relative basis, but overall on an absolute basis to own the stock market indexes, not right now.